So this might be one of the most important news coming out of China today for Chinese tech investors. I'm trying to explain why and do a little bit of speculation and also, well, try to explain what this also means for you as a neo investor. And here's the bit of news. Chinese regulators do fine Didi, so that's the ride-hailing app in China, similar to Uber, more than $1 billion in a fine over data security breaches. And well, you don't need to know the specifics, but basically you might remember that this is when this happened with the Didi IPO, I think more than 1 year ago. This was actually kind of the start of the so-called China crackdown on technology and on the internet companies. This started to raise lots of questions around the VIE structure, Chinese companies IPOing in the US and so forth, and also the regulators' oversight of the Chinese tech companies. And so now they have kind of coming to an end here of those investigations with a very large fine. So you would think that, this is a very, very bad news, another very big fine for Chinese tech companies. But if we're looking at the markets, Didi True Seeing is up more than 13% right now. It's delisted by now, but it seems the stock markets is liking it, despite the fact that this is a very big fine. Now, why might this be? Well, potentially this is not only an end to the investigations into Didi, but it might also mean that there's kind of an end to those uncertainties about regulations in China from the regulatory side. And today, when I saw this news in one of my contacts in LinkedIn, I commented that this is kind of well-deserved of a fine for SoftBank and other Chinese or even international investors into Didi who have been pushing for this IPO, because I think actually that this is kind of the real cause of this whole trouble, that they went ahead despite all the warnings of the regulators. And, it seems like they really try to cash out here and do this IPO despite all of the warnings, because, for investors like SoftBank, this means that they can finally cash in and sell their shares and, basically dump it into the public markets. And interestingly, I received another comment here by Fritz Demopoulos who says, yes, regarding SoftBank, but why have highly compensated senior management who can't push back or lack the sophistication to deal with these important policy issues? So he's also putting some blame here on the management on top of that. And it's interesting, you may not know, but who is this guy? Well, basically, if you look at his history, he is actually one of the few foreign founders who made it in China. It's very, very rare to have a foreigner be successful in China. And he is actually one of the co-founders of Qunar, a Chinese travel platform. He has also been previously on NetEase, SVP for business development. And Qunar, you may not know them, but they have also been a website for travel that was acquired of a majority stake by Baidu and did an IPO at Nasdaq in 2013. So he is, from the management and founders side of things here in China, even as a foreigner. And this company was sold to a company called Drip.com, which I previously also covered here on the channel quite recently. And so, he's not somebody, he is really somebody who's having a real insight into all of the regulatory business, into the startup scene, into the tech scene in China. And he seems to have quite similar views here, and also blaming not only the investors, but also the management on those wrongdoings, which has basically started this whole crackdown. Now that this is now coming to an end with this big fine, could, I think, open up some room for more clarity, how Chinese tech platforms can actually perform in the future, how they are going overseas and IPO. And potentially this might actually even have some implications on the Chinese stance on not only how they are dealing with tech platforms and VIE structures, but also on the whole delisting thing. Because basically what the Chinese regulators want to prevent is that another Didi is going to happen. That's why they called them back made them delist. Now they're gonna do an IPO in Hong Kong possibly, and now with this big fine, there seems to be an end and a clarity on things. So this may open also the way for them, that this thing is now dealt with, that they can now finally move on and also put clarity and structure into the whole US-China thing when it comes to tech listings. So this is a bit of speculation here, but I think it could mark a deal in history in terms of it started the whole thing with the crackdowns, and now going forward, it may open some room. I don't know if that's really going to happen. It's just my take here, together with this other founder here and experienced tech founder here, but we'll see. I think this is kind of a unwritten, not very noticed news of today, but the markets do say that they like it, and we'll see the effects on the broader Chinese tech space. Anyways, let me know what you think about it in the comments. I hope you enjoy that and find that insightful. Thank you guys for watching, and see you in the next one.